Imagine borrowing thousands of dollars and never having to pay it back if you just keep your end of a simple bargain. That's not a fantasy, it's the hidden truth behind forgivable loans, and most people don't realize how much money is on the table right now. What exactly is a forgivable loan? Is it really possible to borrow money and never repay it? A forgivable loan, sometimes called a soft second, is a special kind of loan where the borrower is released from the obligation to repay as long as they meet certain conditions. Think of it like a grant with strings attached. Do what's asked and the debt disappears. If you don't meet the requirements, though, you'll have to pay the money back, usually with interest. Why would anyone give out money that doesn't have to be paid back? Here's the secret. Forgivable loans are powerful incentives. Governments use them to get doctors to serve in rural hospitals. Companies offer them to attract top talent. And during disasters, they've been used to keep small businesses alive. For example, during the COVID-19 pandemic, the CARES Act unleashed a wave of forgivable loans to help businesses keep employees on the payroll. If the business met the conditions, the loan was wiped clean, freeing them from crushing debt. Who qualifies for these loans, and what kind of conditions do you have to meet? The answer varies. Some programs target specific professions like teachers or nurses willing to work in underserved areas. Others might help first-time homebuyers or entrepreneurs launching businesses in struggling communities. Sometimes it's as simple as staying at a job for a set number of years. Picture a financial advisor offered a big loan to switch firms. If they stay for 4 years, each annual chunk of the loan is forgiven, making it a golden handshake that locks in loyalty. Are there any risks or gotchas? Absolutely. The catch is always in the fine print. If you leave the job early, move away, or fail to hit the agreed targets, that forgivable loan suddenly turns into a regular debt. You could owe the full amount back, sometimes with added interest. That's why it's crucial to understand every condition before signing. Can forgivable loans help solve real problems? Without a doubt. They can make college affordable, help small businesses survive during economic shocks, and encourage skilled workers to go where they're needed most. For example, a government might offer a forgivable loan to build low-income housing, but only if the building remains affordable for 40 years. Meet the goal, and the loan vanishes. What's the smartest way to use a forgivable loan? Treat it as a win-win. If you're already planning to do what the loan requires, like working in a high-need area or staying with an employer, it's basically free money. But always ask, what happens if circumstances change? Have a backup plan, and never assume forgiveness is automatic. Are forgivable loans only for crises or the ultra-qualified? Not at all. While some are aimed at essential workers or disaster relief, others are offered by private companies, universities, and even local governments looking to boost their communities. The key is to seek out these opportunities and ask questions. Who's offering the loan? What are the requirements? What's the timeline for forgiveness? Because forgivable loans can be a game changer for your finances and career. The next video reveals how shareholder loans can offer even more control over your money, unlock new tax strategies, and help you grow your wealth in ways most people overlook. Stay tuned.